A flexible spending account may seem complicated at first, and it can be, but the general concept is quite simple. Every sentence I say in this video could have its own video because there are nuances galore. But I want to keep this video simple and around 5 minutes just so it plants a seed in your mind of what is possible. Watch my other videos to learn about the nitty-gritty, and always check with your employer and plan administrator before making any financial decisions. Okay, let's dive in. So, what is a flexible spending account? An FSA is an account that allows you to pay for certain expenses using pre-tax funds. The benefit of using pre-tax dollars is that it lowers your taxable income. So you pay less in taxes and you keep more money for yourself. Think about that for a second. You could save thousands of dollars every single year just by participating in a medical and dependent care FSA, since the funds you contribute towards those accounts wouldn't be counted towards your Social Security, Medicare, federal, state, or local tax liability. Now, what can you use your FSA funds for? There are two types of FSAs, medical and dependent care FSAs. Medical FSAs can be used on thousands of things like copays, deductibles, coinsurance, prescriptions, contacts, glasses, dental expenses, and a long list of over-the-counter items. Basically, anything that's medically necessary would typically be eligible from the medical FSA. For dependent care FSAs, eligible expenses include daycare, preschool, and after-school programs. So that sounds exciting to you and you want to participate. How do you go about doing that? Well, you'll have to enroll into the plan using an enrollment form that you can get from your HR team. Your employer offers an FSA to its employees, and you decide if you want to participate and how much you want to contribute. Once you're enrolled, your employer will put your entire annual election into an account on your behalf. Then they simply deduct a portion of that annual amount from your paycheck each pay period. Yes, the deduction is pre-tax, and yes, you have access to your entire annual election on day one. Your employer basically gives you a 0% interest loan, and you pay them back throughout the year using pre-tax payroll deductions. Okay, so you enrolled and you have money in your account. How do you go about spending it? Well, when you incur an eligible expense, you have two ways you can pay for it. You can either use the debit card that your plan administrator provides you, swipe the debit card, pay for the expense, and you're done. Or you can use a personal payment method and then submit the documentation to your administrator and request reimbursement. Now, that might sound too good to be true, and with everything, there's always a catch. With FSAs, there's 3 catches. Basically, they're not bad things, but they're things to be aware of. First, the FSAs are use it or lose it plans. This means that if you don't use all of the funds that you contributed in that year, by the end of the year, you'll lose the funds. So it's important to plan carefully and not contribute more than you think you'll be able to spend. Another catch is that you'll need to keep good records of what you spend the money on. So, my recommendation is to keep your itemized receipts and all of your documentation in case your administrator asks you to substantiate a specific expense. And a little side note, please don't get angry at your administrator for requesting documentation. They usually don't make the rules and are simply there to try and help you follow the IRS rules. The third thing to keep in mind is that you will not be able to change your contribution amount in the middle of the plan year unless you experience a qualified life event like marriage, divorce, or the birth of your child. And finally, it's important to note that not all employers offer an FSA. So if you're interested in using one, you'll have to double check with your employer to see if it's even available. If it's not, feel free to pressure them to implement one. They save money on your contributions as well, so it's mutually beneficial for both you and your employer. So they might simply just not be aware of the benefits. There you have it. You now know the basics of an FSA. If you have questions, feel free to browse through my other videos or leave a comment below. Thanks, and see you on the next video.